right, so today I want to talk about this topic called dollar cost averaging. And it's a concept I just learned today and it blew my mind because I thought I knew about it. But actually in practice, it's something that I back then wish I have done this, right? And the whole reason why I'm talking about this is because right now um, that after learning about this I want to know that if this strategy would be better than what most trainers or gurus out there have taught me about investing myself, right? So I just thought of doing this. By the way, disclaimer, whatever I share here is not any financial advice, although I have a license, but this is just for general knowledge. Okay, so please do your own due diligence. Okay, so coming back, so dollar cost averaging, right, is basically a way of, in short, it's really about putting a fixed amount of money over a set frequency, like weekly, bi-weekly, monthly, yearly, whatsoever. And for that period of time, is there any like how do I say? Is there any return, so on and so forth, right? So what I was taught by all these third-party trainers and stuff was really all about um, you know, when you buy a certain thing and you just buy it consistently where there's a certain percentage drop, right? So that's one strategy you can do. But just based on DC, this is a very common strategy. And with the amount of money I've put in stocks with those strategy, right, I could have done the same thing and could have gotten better results. Okay, so crypto, I'm just going to use crypto for example, or in this example I can use is my stocks here. Okay, now it might look very, very overwhelming, but just to keep it very simple, I'm going to zoom out a little bit and you will see this icon, this little buy right here. Okay, so if I just click on this buy, I bought it in 2021, July the 19th. Okay, so along the way, of course, I bought it, so on and so forth. And now basically, if you just saw that pricing, right, if I go here, it was $206. And now it's worth like $83, $84, right? It's a huge loss in terms of paper-wise, right? So if I were to go to, let me use another calculator. The one I just found earlier was, let me see, dollar cost, this one. Okay, so in this one, I'm going to put the same time frame, and if I, let's say, purchase it at that same time, okay, let me just put it here, baba, let's say I just use $100, okay, and let's say on a monthly basis, okay, and I started in July, right, 17. Okay, great. Let's see how much it is. Okay, we calculate here. Now, one thing for sure is, one thing that we need to account for is number one, as stocks, right? Some platforms may allow it, but for these instances, I only can buy the price of it. So if it's $200, it's just $200. I can't fractional buy it. Okay, that some platforms do. And by the way, just to make this disclaimer, they all come with their own risks. You don't really own the stocks. The platform owns the stock. You just have so-called access to it, right? So if the company shuts down, everything is gone. So that's the risk of investing in yourself. But yeah, anyway, coming back to the topic. So if I were to do it for like $100 every single month from the day I started learning about investing, I would be in the loss of negative $467 or $68. Okay, of course now I bought like a couple of them as I see here, and if I were to look at my portfolio, right, could I have lost lesser potentially, and if the market was good I could have made a lot more, right? Now let's look at crypto. I like this design. So let's say if I use the big two, right, Bitcoin and Ethereum, and because you see, not many people have the ability. I think the one lesson I made, or the one lesson I've learned, and it was learned from the mistakes I made, right, was um, you might have the funds to purchase something today, but you might not have the funds to purchase it tomorrow. So 100, if let's say this particular tool, this financial tool like crypto, what, it's $100, and you can buy one, but I cannot buy. Can I afford to buy one every single month, right? So let's just start small. Let's go super, super small. Let's say $1 USD, okay, on a daily basis. So it's about 30 over dollars a month. And I started in 2017 of July, okay? And let's say today is 2023, and our latest statistics comes up to, I think, October, since this is the month of November. So imagine this, if I place one freaking dollar on a daily basis from July 2017, when if I knew about crypto, okay, look at the amount of investment based on 2002, and the value now is over $10,000. It's amazing. Now again, I'm just emphasizing on the disclaimer that this is just for information, for educational purposes only. This is not financial advice. So please do your own due diligence. Please know that cryptocurrency is not backed by any real cash. So yeah, that's that. Okay. So now this is where the crazy period is in crypto. But I personally, I think, joined in 2021, right after stocks. I think, or about the same time as stocks, sorry. So let me go back to June. Let me look at my stocks here. This was in 2021. That's about the same time when I started to dive into all this very funny investments and stuff, right? Okay, let me go back. 2021. Okay, let's see. July 20. Oh, one more year. So this is like after the big hike, right? Okay, this is more realistic. So if I were to put $800 a dollar every single day, I would lose some money. Do you see? So it is, it does take a long period of time. Let's look at Bitcoin instead. Okay, $1 every single day. A purchase, I would have made some money, 20%, which is not bad considering that the average is, let's say, 4% from the banks, 8% from unit trusts and stuff like that. They all come with risk. Please understand that. Okay, but again, this is just for educational purposes. I just realized that if I have done this, that's amazing. I could have grown my amount, and the investment won't be so much as well. And the fact is, the rule of thumb is, when I make any financial decisions, it's really about not about how much money I can make, but how much would I lose if I'm wrong, right? So again, coming back to this, right? Yes, I could have made 20 over percent, but if I went for either I have lost 7%, so that's about $100 over. It's still bearable, considering that it's $1 a day, so that's like $265. It's a very interesting vehicle to test out and stuff. So let's just say I want to use this cryptocurrency that I actually bought at $200, and today it's worth almost like $80. There was a spike recently. Okay, I would have just broken even rather than lost a huge, like over 50, 75%. And that is just really, really ridiculous, right? So what is the lesson? The lesson is if you were to do this on a dollar cost average or any investment at all, I think my suggestion, let me change the word. My observation is to really ask yourself, can you commit to a frequency long enough to see returns, right? Again, I'll put it again. The observation I have for you to consider is, can we, when we buy all these things, do we have enough cash flow to sustain to a point where we can see some profit, So yeah, that's what I really wanted to do with this video. It's very interesting to share this simple concept that I took it for granted. I thought I knew, but when you apply it, or what others have taught me, it's so different. It's really out of the norm. Yeah, really do your homework. Okay, so that's all I have for today's sharing dollar cost averaging. Let me know what you guys think. Let me know if you want to start on your financial journey. I am a licensed financial advisor. You can look me up online, but this is something that I'm also exploring together with you. I think this is a journey where I want to document and share what I learned from the professionals who have been in industry, financial industry for the last 20, 30 years. And the reason why I would join or even do this in the first place is not because of the money. I think that's really more of a byproduct, but rather because I came from the affiliate marketing space. And it's always about selling other people's product, right? And I think in this professional line of work, right, it's really about, can you learn what it means to be of service to others rather than for yourself, to put others first, right? To put the mission first, to put the people thereafter, right? So that's really the whole idea of like, hey, can I actually serve not just a one-on-one client? Like, if you do business, it's very transactional, it's just a one-off thing. But can you actually serve them for a longer period of time, because decisions you make really affect everything, right? So that's all I have for this particular video. Again, you can reach out to us, reach out to me, and we can have that conversation about the 4Ws, right? What is the 4Ws? The 4Ws is basically the fundamental of any financial planning. From the day you were born, the day you start working, to the day you want to retire, and to the day you die. And what happens after your death, in terms of legacy planning. This is what we call the 4Ws, the 4 wealth thing that I will do in another video. So stay tuned for that. Okay, with that said, this is Riley, and I hope to see you guys in the next video.